And this is quite bullish in my opinion, right? Furthermore, it is optimistic for the following 3 months. It's not merely a small hit. No, for the next 3, 4, or 5 years, this is bullish. This could be the beginning of an extremely long secular bull market. It's estimated that 10 times the amount of money that has ever been invested in Bitcoin will soon enter the Bitcoin ecosystem. Renowned mathematician and businessman Fred Kruege discusses why he thinks Bitcoin will continue to rise at a parabolic rate for the next 5 years. In a recent video, Kruege examines a chart created by Matt Hogan, demonstrating how Bitcoin's steady returns over time have precisely matched predictions. While Kruege is unsure if 2026 would be a bad year, he does predict a significant increase in double-digit returns, so he cautions investors. In fact, he projects a potential 75% return in 2026 and a 100% return in 2025. This chart, in my opinion, properly captures the essence of the situation. It's only the yearly returns. Thus, as we can see, the first 4 years were undoubtedly unusual, and the first 3 years were particularly noteworthy. Mt. Gox saw a 5,000% increase in 2013. In 2013, it increased 50 times. Then came the Mt. Gox crisis, followed by this second bull market that ended in the December 14x surge. Indeed, bad? It did rise in December, as you pointed out, but it only appears as a 14x, then a 75% retracement, then nearly the exact same thing on a much larger scale in the subsequent cycle, and finally this one. Thus, I would want to advise against expecting 2026 to be a very bad year. You know, I'm not so convinced it will be. Here, should I anticipate more double-digit returns? Yes, I do. I'm thinking about 3 digits. I believe we will receive a 100% refund. We may have 100% in 2025 or 75% in 2026. We're going to have an amazing 4 years here, and just so you know, this is all that they have done. As a result, we're in very decent shape. As Matt states, we are precisely on track. I concur with this. Being alive at this moment is exciting. Simply put, this is a fantastic time to be involved in Bitcoin because you're actually jumping in before this massive financial wave has had a chance to fully materialize. To summarize, I believe that the Bitcoin ecosystem is about to witness an influx of 10 times the amount of money that has ever been involved in Bitcoin. They will also need to purchase this Bitcoin from individuals such as myself. That is merely a fact. And I, along with many other guys, do not want to sell Bitcoin. Because of this, the price will rise in proportion to supply and demand. Additionally, I find the data to be very persuasive. 20% of American wealth can be attributed to self-direction. That refers to traders using their own funds. Managed money makes up 40%. Thus, those who decide on investments on behalf of others fit that description. Institutions make about 40% of the total. Insurance providers, pension funds, and other institutional money managers. And up to the CTF, which took place on January 11th, I believe 80% of these institutions had no opportunity to participate in this market. Even the remaining 20% needed to take action. Am I correct? They were forced to choose between self-custody, which is extremely difficult for the average person, and trusting an exchange like Coinbase or Kraken, which despite their functionality are not FDIC insured, are not well-known brands, and are not comparable to Schwab, Vanguard, Fidelity, or similar entities. Thus, up until quite recently, the majority of people, let's say 90% of the population, were either totally excluded from the Bitcoin economy or faced strong incentives to stay out of it, and then everything was different. However, as Matt previously stated, just because the Bitcoin ETF was approved doesn't guarantee that it will be accepted on all platforms, so things didn't totally change overnight. Thus, for instance, I have a Goldman Sachs account. At Goldman Sachs, I am unable to purchase Bitcoin ETFs. The same is true for Morgan Stanley and many other places. Am I correct? Therefore, the ability of these platforms to provide the ETF to its subscribers is still in the deployment phase. Furthermore, the advisor market requires some time to develop. This brings us to our final point. Why does it happen too? They will, however, decide on 2 different approaches to due diligence. They must first truly determine whether their company wishes to participate in Bitcoin. Not everyone does. Vanguard doesn't. They don't think Bitcoin is a legitimate asset. They also don't really care about gold. For the most part, other people are just now getting interested in Bitcoin. If you work for an insurance business or pension fund you might not have ever used all of this technology to look at stocks or bonds. Some have models, they are aware of the markets, but they have never given Bitcoin any serious thought. 1%, 2%, 3%, 5% of our funds will be invested in Bitcoin. They have a fiduciary duty for a large sum of money, and no one wants to lose their job. Because they bought Bitcoin and it turned out to be a hoax, so they have to conduct a little, or rather, a lot of due diligence before they ever make that decision. They must get to that point even though it's not a hoax. Thus, as Bitcoiners, we overlook that. Thus, I believe that they are currently 5 months into this process. Some of these establishments, such as Morgan Stanley, are only now beginning to make headlines. They may soon be on the verge of taking Bitcoin on their platform, according to rumors. Thus, the rollout phase is just now beginning. And this is quite bullish in my opinion, right? Furthermore, it is optimistic for the ensuing 3 months. It's not merely a small hit. No, for the next 3, 4, or 5 years, this is bullish. Therefore, I believe that we are in a secular bull market that could last for a very long time. And we could be able to go much, much higher with this.